Thank you so much for joining us. I know you all must be very hungry, but I think I'm making no understatement when I say that I'm joined by one of the most exciting founders in crypto, who is Stani, the founder and CEO of Aave. And Stani, one thing that really fascinates me about your journey is that Aave went from this niche experimental project to the leading decentralized lending protocol worth over 40 billion today. I'm really curious, how did you recognize the need for decentralized lending solutions so soon? And I just want to know how has this journey been for you?
Yeah, I mean it's it's kind of interesting because it comes out of like some of my previous work before stumbling upon to Ethereum and basically everything that you can do in the financial context. I was building fintech applications and quite excited about the kind of like previous waves of fintech innovation from like crowdfunding, peer-to-peer lending, and I found it really fascinating because I've been always a bit of a finance geek, and then when a lot of this fintech innovation came, I was excited because you could actually build financial applications that are not just restricted in a one particular region, but you can serve a global audience. And that was really interesting, and neobanks were starting to grow, and also peer-to-peer lending and crowdfunding, and at the same time, a lot of regulation came at that point. So when I realized what you can do actually on Ethereum when you have this permissionless ecosystem and capital can flow in any type of an application that has an opportunity, and you have like a full end-to-end transparency. That really created, this idea that you can actually now truly build for a global audience, and you don't have the same issue as in fintech where you have to have different kinds of vendors and touching different kinds of API endpoints, and the API endpoints break here and there, and you have to maintain your application. You have a actually truly permissionless and automated system that you can truly rely on. And can be very resilient as well.
I think this weekend really speaks to the resilience of Aave, and I'm sure a lot of you guys are really thinking about this record crypto market crash. We've seen at least 20 billion worth of liquidations. I'm saying at least 20 because we don't have the full data from all centralized exchanges. But one amazing thing about this is that Aave really handled this massive historical liquidation event well. Can you perhaps speak on this? And is this do you see this as a signal or a testament for decentralized financial technologies? Because when we look at TradFi, the criticism is always that your technology or protocol won't handle a crash. But we've just seen one of the worst crashes in history, and Aave is doing perfectly well.
Yeah, I think every crash that we've seen in the kind of wider crypto space is always bigger than the previous one. So obviously, like similar situation had happened before, like during the FTX, and a lot of leverage was wiped out in the system when asset prices went down. In a more like a DeFi context, we had a Black Thursday as well. So now last week was a Black Friday, and I think every single kind of stress test really helps to understand the reliability and resiliency of decentralized finance. And I think it really surprises me how well the system works. And at this particular time, we also saw that actually DeFi was really the system that worked at its best compared to some of these centralized platforms and service providers. So I think obviously, no one really wants to see market crashes, but it's the only way to test whether a system is resilient, because you can innovate and build anything in DeFi because it's a really amazing and open ecosystem, and that creates a lot of innovation and financial opportunity. But you truly risk test these protocols when the markets are going down, like last Friday. So I actually think that it's a good idea that I don't mind that users are having leverage on the assets that they really I think are the future. What I really want that a lot of this activity happens on chain transparently and publicly, so anyone can actually monitor and quantify the whole risk of the system end to end in DeFi.
I feel like that's a very good point, particularly after this weekend. And just to your point, Stani, we did really see DeFi protocols hanging tight there, whereas a lot of centralized exchanges did have glitches, they did have bugs. We did see some of the exchanges paying hundreds of millions for these platform glitches. So once again, it feels like a testament for decentralization. One more interesting thing I'm really seeing this cycle is that for the first time, it feels like we don't just have the protocols, the builders, the founders like yourself. We also have the global regulations coming together. We already have MiCA here in Europe. Over in the US, we've just had the Genius Act drop, and we have a few more acts coming. Do you feel like this is, I'm asking you because you obviously have a degree in law as well, you have a legal background. I'm curious, how do you see this shaping out? Is this the moment for DeFi to really enter TradFi and traditional markets?
Yeah, I mean, my initial stance was that I think smart contracts and DeFi really solve a lot of the challenges that the financial world had in the past, not just only decades, but past the hundreds of years, even thousands of years. So by design, you can avoid things like the custody risk, add more transparency, and reduce the information asymmetry. So by nature, the way DeFi works and providing like best execution, it solves all of these problems. So my first kind of reaction to what DeFi can do a few years ago was basically removing some of the regulation that isn't needed anymore, because you have a better financial execution environment that is more transparent and gives a level playing field for everyone. But now, and that's funny to say because I did graduate as a lawyer, and I kind of like I love the legal field and legal problems, but at the same time I am a technologist, and I understand the capability and the potential of what DeFi and blockchain can actually do. But more recently, I've noticed that actually regulation creates a lot of clarity, especially for the more kind of traditional market participants. So with Genius Act, for example, coming in, there's more actually fintechs interested in stable coins. Same for example for banks, for the big tech, and even e-commerce as well, thinking how they can leverage stablecoins and the wider technology. And stablecoins for Aave is extremely important because we're a very stablecoin-centric business. We have at peak 75 billion worth of net deposits, and out of that, 15, 16 billion is in stablecoins. So it's a very strategically important for every stablecoin issuer. So I do think there's a lot of value in providing the clarity, but the devil is always in the details and what is being regulated. And what I try to always advocate is not to regulate the technology. So you don't regulate, for example, Bitcoin as a technology. You shouldn't regulate DeFi as a technology either. But you can regulate certain things that happens on the edges and financial service providers that are using this technology for their own purpose. And I think that's like a clear distinction we have to keep always in mind.
That's a very clear and important distinction. Now, I want to switch over and talk a little bit about what's next with Aave, because our time is obviously limited. But you guys recently crossed 75 billion in net deposits for the first time. You're preparing for a big update for Aave. Could you tell us a bit more about what's next for the rest of the year for Aave?
Yeah, I mean, we've been also focusing a lot on real-world assets. So we launched Horizon. It's a new Aave market where you can use tokenized assets as a collateral, tokenized funds, tokenized money market funds, and credit funds, and borrow stable coins. And these tokenized assets are permissioned on the asset issuer level where the compliance happens. And what's interesting here is that these market participants that are holding these assets on chain instead of in traditional financial institutions, they can access 24/7 liquidity through Aave Horizon by borrowing stable coins. And this is very important, especially in situations like what we see in last Friday, when everyone was running for in the search of liquidity. And then for these stablecoin lenders, they're able to lend out against these traditional assets on chain, and have a different type of a yield and a risk profile compared to lending against native crypto assets. And then we are focusing a lot on the Aave v4, which is the next generation of lending protocol, which has a very interesting kind of hub and spoke architecture model where we concentrate the liquidity into one particular hub, and then we allocate hubs based on risk profiles. And this allows a lot of the DeFi innovation to scale, because if you innovate something interesting and new in DeFi, you can create a spoke and connect to wider, the deeper Aave liquidity as the use case actually starts to get more traction and scale. So those are the two main things, and also the Go Aave native stablecoin is something we put a lot of attention as well, because it brings higher margins to the Aave DAO, and that's something that we're also focusing on growing.
That's excellent, Stani. I'm particularly happy to know that some of the oldest protocols continue building up their roadmaps, particularly because we're in the presence of the man who basically invented decentralized flash loans and decentralized lending. Stani, I'm afraid this is all we've had today. Thank you so much for your time. And for you, ladies and gentlemen, please look forward for Aave's incoming roadmap and a lot of new exciting things to drop before the end of the year.
Thank you so much.
Thanks a lot, Stani.